All right, let's jump right in and tackle a huge piece of the GST puzzle, the electronic credit ledger. You might hear that term and think it sounds complicated, but I want you to think of it as your business's own digital tax wallet. We're going to break down exactly how it works right now.
So think about it. You're running your business, you buy supplies, you pay GST on that purchase, and you know you're supposed to get that tax back as a credit. But have you ever stopped to wonder, where does that money, that credit, actually go? Where does it live before you use it? That's the exact mystery we're solving today. And here's our game plan. First, we'll define this digital wallet and see how a credit gets created. Then, we'll dive into the really important part, the rules for spending that credit. After that, we'll look at a few dangers and some special cases you need to know about. Then we'll cover how you can manage your own account, and we'll wrap it all up with a super useful cheat sheet. Sound good? Let's go. Okay, first up, let's get comfortable with this idea of a digital tax wallet. This first section is all about the origin story, what this ledger actually is, and the journey a simple tax credit takes to land there.
So what is it, really? The electronic credit ledger is basically your official account on the GST Portal, where all your input tax credit, your ITC, is kept. The key thing to remember is that it's all handled automatically by the system. You don't have to update it or edit it. It just keeps a running tally, neatly separating your credits into IGST, CGST, SGST, and CESS.
And getting credit into your wallet is a super simple three-step dance. 1, you buy something for your business. 2, you pay the GST on it. And 3, boom, the system automatically credits that GST amount right into your ledger. It's a smooth trip from your invoice right into your digital wallet.
All right, so you've got this credit building up in your digital wallet. Now for the fun part. How do you actually spend it? This brings us to the rules of the game. And knowing these is absolutely crucial for managing your taxes the right way.
Now check this out. Think of your IGST credit as your all-star player, the most flexible currency you have. The first rule is simple. You have to use your IGST credit to pay off your IGST tax bill first. But here's the cool part. Whatever's left over can be used to pay down either your CGST or your SGST bill. You get to choose the order. It's basically the universal donor of tax credits.
Next up, we've got CGST credit. The logic is pretty similar. First, you use it to pay off your CGST liability. Makes sense. If you have some left, you can then use it to pay off your IGST liability. But, and this is a big but, look at that giant red X. You can never use your CGST credit to pay your SGST bill. They exist in two different worlds.
And you guessed it, the rule for SGST credit is just a mirror image of the last one. You use it to pay off SGST liability first. Anything extra can go towards your IGST bill. And again, there's that hard stop. SGST credit can absolutely never be used to pay off a CGST liability. This separation is the bedrock of the system.
Honestly, if you remember just one thing from this entire explainer, let it be what's on this slide. We call it the Great Divide. Both central GST and state GST credits can be used to pay off integrated GST, but they can never cross over to pay each other. It's like two parallel train tracks that never ever intersect. And it's not random, it's because the central and state governments keep their tax collections in totally separate buckets.
Okay, so you've got the rules down, and it seems pretty straightforward, right? Well, for the most part, it is. But now we need to talk about some curveballs. A few situations where things can get complicated, and you might find that you're not fully in control of your digital wallet.
So let's talk about something called ITC blocking. If a tax officer has a reason to believe a credit might be fraudulent or if something is under investigation, they have the power to temporarily freeze that credit in your ledger. Now, they won't just do this in secret. You'll get a notification by SMS and email if it happens.
Now get this, because this is where it gets a little wild. Can an officer block credit you don't even have yet? The answer, surprisingly, is yes. They can block an amount even if your balance is zero, which means your ledger would actually show a negative balance just like you see here. Any new credits you get would have to first fill up that hole before you could use them.
And things can even go one step beyond a temporary block. If you have an outstanding tax bill that you haven't disputed, an officer can actually make a direct withdrawal from your credit ledger to settle that debt. This isn't a freeze, it's a permanent debit. It's important to know, though, they can only do this for the tax part of your bill, not for any penalties or fees.
Okay, enough of the scary stuff about blocking and debits. Let's get back into the driver's seat. This section is all about empowering you, showing you exactly how you can view and understand your own credit ledger whenever you want.
And thankfully, it's incredibly easy to find. This is the exact path on the GST portal. You just log in, head over to Services, then click Ledgers, and finally select Electronic Credit Ledger. Just a few clicks and you're in. You can see all of your transactions for the past 12 months.
And if you're worried about privacy, don't be. Your ledger is totally confidential. Only 3 groups of people can see it. You, of course, your authorized GST practitioner, if you have one, and the tax officer who has jurisdiction over your case. No other business or taxpayer can ever peek at your credit information.
Now, here is a really important point that trips a lot of people up. Just because you have a balance sitting in your credit ledger, it does not mean your tax is paid. The credit only officially becomes a tax payment when you actively choose to use it. That is, when you debit the ledger while you're filing your GSTR 3B return. It's a manual step you have to take every single time.
Phew, we have covered a ton of ground. So, to make sure it all sticks, let's wrap this up with a quick-fire cheat sheet that boils everything down to the most important, must-know facts.
Okay, rapid fire round. What's in it? Your input tax credit. Can you edit it? Nope, it's automatic. What can it pay for? Your tax bill, and only your tax bill. Can you use Form PMT-09 with it? No, that's for your cash ledger, a totally different thing. Can it be blocked? Yes, an officer can do that. And finally, do you have to get a refund if you have extra? Nope, you can just carry it forward. A perfect little summary.
So there you have it, the electronic credit ledger, totally demystified. It's way more than just a number on a screen. It's a strategic tool for your business. So the real question to leave you with is this. Now that you know the rules of your digital tax wallet, are you really making the most of your credit? Something to think about. Thanks for tuning in.